Well, in our first story tonight, the Ghana Commodities Exchange has listed sesame on its boards, making it the fourth commodity to be listed on the Ghana Commodity Exchange. Chief Executive of the exchange says with only 10 warehouses, it's difficult to expand quickly. So far, 300,000 smallholder farmers sell to the Ghana Commodity Exchange.
Bread, guess what? If you ever saw this in the market, sesame, well, it's been introduced onto the Ghana Commodities Exchange. And so you can actually just come and sell to the Commodities Exchange, or if you want some to buy, well, definitely this is where to find it for all of you bakers. Well, so I'm here with the Commodities Exchange boss to find out exactly how the new introductions are faring and generally things that's happening on the market. Well, so good afternoon. You introduced sorghum, you've introduced soya bean, and then now sesame. How's it making the market look like?
Well, it's making the market interesting. There is a lot of diversity now in terms of commodities that have been traded through a structured trading system. Sesame in particular is a very, very important commodity. It's got a highly valued market. Our farmers are cultivating them. It's very, very new. They have started cultivating them. They haven't been able to optimize, the use of sesame in terms of optimizing their revenue. They are producing them, and it's just a small group of people who are buying it and then paying them anything. So we have decided to centralize it to the exchange now. So what it means is that our farmers can come to the exchange and trade it for better prices.
So year to date, what are the figures looking like?
Well, we are still in the building blocks. We are still trying to let the market understand what the exchange is all about and the attributes and the benefit that the exchange is bringing in. We've been able to mobilize about 320,000 farmers. Some of them are built into farmer-based organizations. And then we are also trying to train them on how to trade on the exchange. The exchange has also developed brokers who were actually working on the Ghana, stock exchange, and those brokers are now also working in the Ghana Commodities Exchange. So we are building the market, but what is important is that there's a huge evidence that the services that the exchange is offering is very popular among Ghanaians, particularly farmers and traders.
Tell us how the lack of warehousing is impeding the fast tracking of things.
Yes, so the commodities that we trade on the exchange are standardized. So it means that we have to hold them in our warehouses, standardize them, and then get them traded on the exchange. So warehousing is one of our biggest challenges yet. Right now we are actually operating from or delivering from 10 warehouses. We're expecting that if we have more warehouses, it means that we'll be able to support more farmers. Initiatives like planning for food and jobs, there's a lot of production increases, productivity increases, and then we believe that if we are able to get more warehouses, then we can get more farmers who can get mass.
All right, we can hear next from the CEO of the National Food and Buffer Stock Company, Hanan Abdul-Wahab, who says they anticipate 40 new warehouses will be handed over by the end of the year. Speaking to Joy Business, he noted some 8 warehouses under the One District, One Warehouse initiative have already been completed and handed over to them.
In 2017, the president cut short for the implementation of the One District, One Warehouse initiative. Under this initiative, government intended to construct a 1,000 metric ton capacity warehouse in each district aimed at providing storage facilities for farmers to store surplus harvest anticipated from the Planting for Food and Jobs initiative. Despite the initiative, farmers still lament there aren't enough storage facilities for their harvest. But speaking to Joy Business, the CEO of the National Food and Buffer Stock Company, Hanan Abdul-Wahab, indicated 8 new warehouses had been completed, with 40 more expected by the end of the year.
Currently, 8 of both the Ministry for Special Initiative and Ministry of Food and Agriculture have been completed and handed over to the buffer stock. I can mention of the Ejura one, where we have 2,000 metric tons, the Yagba Kubore, and there's another one too in the Bono East regions. So the rest of them, the timelines are, we are expecting that there would also be, there will be a handing over of 40 new ones in addition to the 8 by the end of this year. So the rest of them would also, I'm sure, first quarter of 2020, we should be able to have the other set also being handed over to us.
Mr. Wahab also noted that government had initiated the construction of farm roads to allow access to the warehouse facilities, which some farmers say is too far.
What we are doing to deal with accessibility to farmers are the construction of the farm roads. That government is doing very well in that, because those are things that are very important to us now, because the location of the warehouse doesn't really matter. The most important thing is that the license buying company should be able to reach out to the farmers and buy from them. So farmers, what they need from us is to create the market link between them and our license buying companies. And our license buying companies can also move effectively when roads leading to farms are constructed, which government is doing that.
For this year, the National Food and Buffer Stock Company has disbursed close to 50 million Ghana cedis for the purchase of grains. For Joy Business, Sheila Tamaklo reporting.
Tonight, the Ghana Union of Traders Association, GUTA, has condemned local traders at Opera Square here in Accra for closing shops of some foreign retailers on Monday. President of the association, Dr. Joseph Obeng, tells Joy Business leadership has been in talks with the national security to forestall any such actions in the future, especially as tensions rise over the closure of the Nigerian-Benin border.
Leadership of the Ghana Union of Traders Association has disassociated itself from the recent closure of foreign shops at Opera Square in Accra. Joy Business reported of how some 100 foreign shops got shut down for what local traders say is a breach of the GIPC law. President of GUTA, Dr. Joseph Obeng, tells Joy Business leadership has called for calm and also sought the intervention of the national security.
This one is not coming from even the leadership, and we've done all our best. In fact, we even informed national security and then the trade ministry. In all this, I would still want to appeal to our members to have some restraint. So that whilst we are giving the government to also fund a very solid ways of treating this, solving this situation.
This is not the first time in a year for GUTA members to embark on such an exercise. Last week, a similar distress action was embarked upon at Swami Magazine at Kumasi. Dr. Joseph Obeng argues that the closure of these shops follows the protracted closure of the Nigerian-Benin border, which has left trucks from Ghana stranded at the borders.
So in this particular case, the push factor is the closure of the Nigerian borders. You recall that Nigeria did not inform Ghana adequately for us to be warned not to go to that destination. And then people just went there and their captors are locked.
So far, Nigerian authorities have revealed an extension of the border until January 31, a development the president of GUTA, Dr. Joseph Obeng, has described as proof of weak ECOWAS protocols.
Now, Tullow Oil says it has brought an end to works on the turret bearing at the Jubilee oil field this year. Tullow Oil over the years has been forced to shut down production on the Jubilee field due to the challenge with the bearing. The equipment aids the extraction of crude oil from the seabed in the Jubilee area. George Affe has more.
We bid for that opportunity. We put a very fair bid on the table. It was just unfortunate we were beaten by another bid. So I think, did we do the right thing? Yes, I think we did. Will we learn for it for the next time? Yes, we will. So you will always learn in this industry. I mean, that's how we do our business.
What would it mean for you in terms of consolidating your position here by getting other wells? I mean, yes, you are big in other markets. It's not just about Ghana. What does it mean for in terms of the consolidation here in Ghana for your operations even going forward?
Yes, well, we thought actually when we did the previous bid round, we thought that was one of the unique advantages that we had as Tullow. We've already got an established employee base, we've got an established work base, and we've got an experience of working in the country. So we think that actually brings us some positive advantage. And that's something that in any future option or anything that we approached, we would certainly be playing to what we think are the positive strengths of Tullow. Because obviously being incumbent in any country is a good position. So, and while we have these existing two fields, we want to be here for a long time. You know, Ghana was very important in the building of where Tullow is today, and we do plan to be here for a long time. So adding other parts to our portfolio would be really a positive step forward.
The Torrid Bearing, have you brought its works to an end, or you still have some final knots to tie as we speak for 2019?
So all the activities associated with the tour that we'd planned for this year are now complete. We've got one final step, which is we're going to install an offshore loading buoy, but that's an activity that we'll do next year, and there'll be no shutdown activity related to that, whereas some of the activities that we did in 2019 did have some shutdown time. We did the final step, which was the rotation of the vessel, and we didn't manage to do that safely in the end without doing any shutdown. So all the main works on the vessel complete, with this final offshore loading buoy to be completed in 2020.
As we speak right now, in terms of real shutdown works on the field, it has really been brought to an end.
Well, there'll be the usual annual shutdown activity, because you have to do that from a maintenance point of view, but the big shutdowns associated with TRP are now complete.
What would this mean for Tullow? Because I know that in the past the shutdown impacted on your production as well. So now that, as in the shutdown for the Torrid Bearing, let me talk about that one. Now that you've brought close to that, how would that impact on production-wise going forward, and even for the fortunes of the oil firm?
Yeah, I mean, it's a very positive step, because when you've got the field shut down to do all the remedial work, obviously you're not producing oil, you're not generating revenue, so that's revenue for ourselves as joint venture partners and revenue for the country. So you want to minimise shutdown periods as much as you can. So now that we've got that work complete, that's a very, very positive.
Chief Finance Officer Tullow Oil, Les Wood, speaking there to George Wiafe. Now, financial consultant Charles Mensa says he is disappointed the strong profits recorded by banks were not influenced by lending to growth sectors of the economy. A recent banking sector report showed the profits ending August this year went up by more than 30% to hit 2.2 billion cedis, majority from interest income.
The very bank that you talked about, that they made quite 400 million. I'm not sure you are referring to an indigenous bank.
No.
It is the multinational
foreign bank.
Yes, it is the multinational bank. Now, George, if you look at the breakdown of the profits, you notice that largely it's coming from the lending to the government, lending to the public sector. And performance in those sectors have been pretty good. And therefore, if you're lending to the state institutions, if you're lending to government, because government itself in the last couple of years have invested quite a lot of money, in infrastructure, on projects here and there. And once they are borrowing from the system and they are paying, or the interest is accruing, and they are earning those monies, and there's no impairment there, yes, the banks are bound to show that profit. So I'm not quite surprised. One would have expected, some profit to be made from the private sector. And private sector, I'm referring to the agriculture sector, the industrial.
And that's where I'll come in. That for you, are you one of those who are also worried that the book, the lending book or the loan book, they are not going to sectors that can really turn around the economy or even grow business? Because that's an area where you deal with a lot of people that these are not going to private sector, medium-sized, small-sized businesses, or even the established one, because there's always the complaint about cost and even access to credit. Yes, the banks have done so well, but it didn't come from strong earnings from businesses that they lend to.
Yes, George, that was what I was saying earlier on. I mean, the sector I deal with, which you probably might be aware, is the SME sector, and I've been involved in quite some time now. One of the key things is the cost of capital, which has affected them. And then with the recent banking crisis, it kind of took some of these SME out of the game because they had those indigenous banks lending to them, and they themselves were not performing, but it affected them. Now, with this performance by the banks, like I said, one would have thought that profits would come from the SME sector. I mean, if Bank of Ghana is doing analysis and they can tell us that this, like stating the public sector, SOEs and things, if they can also narrow down to this is the profit from the private sector, broken down into the large private sector, the medium private sector, and the small sector within the private sector. Once you do that, then everybody will see clear growth. Because the more we lend to the small and medium-sized enterprises, the more we see growth, the more we see a lot of people being employed. But if we are sticking to lending to government and lending to the large institutions, yes, we'll show huge profits, but it doesn't trickle down to this small and medium-sized.
All right, so up next, we want to bring you today's edition of Joy Business, breaking it down where complex jargons are made simple. Philip Namfori takes us through some banking terms and something that's got to do with the council. He has a surprise guest on this session. Let's take a look at what he has to tell us.
Hello and welcome to Joy Business, breaking it down with me, Philip Namfori. And today, my colleague Albert Obisiu was going through the dailies in our morning editorial meeting and stumbled across something that seemed to baffle her, and I'm sure it baffles most of us, and she wanted me to do justice to it. I hope I can break it down for her, and I have to my left and to your right, Alberto Obisiu. Alberto, welcome.
Thank you, my analyst.
Thank you for that rousing title. Anyway, so you have in front of you the Economy Times, and what exactly were you going through that seemed to bother your mind?
When I have my analyst here, I have nothing to worry about. And what crossed my mind is banks' profit growth drops. And I've had assurance from the president, from the governor of the Bank of Ghana, that the banking sector is picking up. So I want to find out where from the decline, what caused this decline in the banking sector.
Alberta, thank you very much. So the Bank of Ghana releases a report every 2 months, and it's called the Banking Sector Report. Now, in there, the Bank of Ghana puts together the data of all the 23 banks operating in the country. Whatever time or number of banks there is, it will look at all those banks. Now we have 23 banks in the country. So now Bank of Ghana will put the data together, and media houses like this will pick it up and share the stories. Now, if you look in the report, you realize that over a course of 1 year, that's from August 2018 to August 2019, the profit has dipped. Why? Every institution, corporation, entity has two main lines. Their income and then their expenses. Now, if you look at banks, banks get their income from two main sources: interest income and fees and commission. Interest income is what they get from when people are repaying their loans, etc. And fees and commission, the charges they put on our accounts, our credit cards, debit cards, etc. Now, they have expenses, such as the fancy suits they have to buy for their staff through their salary they give them. When you see their fancy cars driving around, their big buildings, etc., those are their expenses. Now, at the end of the year, when they compute, your income should be more than your expenses. And when you tally that up, in the end, you get your profit. So all they are saying is that, and if you look into the report, it's just saying that when they were analyzing from last year to this year there was a pickup in the expenses of banks in comparison with what brings them money. So that reduced the effect of their profitability, but they are still profitable. Just that it has reduced. So if maybe last year they were making 100 billion Ghana cedis in profit, this year they're making 90 billion. They are still profitable, but the margin has reduced.
So does it mean they were buying more cars, they were buying more suits, they were building more offices?
Fantastic question. So they were doing more in terms of operational expenses. So maybe they had more bills to pay, water, light. Maybe they bought more equipment for their staff, took their staff for more training, increased salaries. Those are some of the ways in which banks' expenses increase.
Okay, so I want to know, going through the report, I saw something on like return on equity. I don't understand.
Okay, so return on equity is essentially a metric or a ratio used to judge the health or strength of a bank. There are many others. There's the capital adequacy ratio. I'm sure you're very familiar with that one. But if you look at the return on equity, it's just looking at how profitable a bank is. So in financial terms, they take a ratio of the bank's income divided by the shareholders' equity. And shareholders' equity is those who started the bank. So when they strike that average, that percentage will tell us if indeed the bank is doing what they have to do to return value to their shareholders by being profitable.
And return on assets?
Return on assets simply, when we talk about assets, assets are things that you use to generate value for yourself. So when you look at a bank's return on assets, it's just stating to us or telling us, and it's normally a percentage, it's telling us how the bank is using what they have to do more. So how are they using their buildings? How are they using their investments? How are they using their assets to generate more for themselves? That's essentially what it means, return on assets. And all these are more or less ratios to check and see if indeed the bank is functioning efficiently.
Okay, so let's talk about fiscal council advisory. Behind the scenes, you were telling me they were for the president to advise the president on expenditure and other things. Are they helping? Are they helping?
That's a very good question. That is above my pay grade, but okay. So fiscal has got to do with expenditure and revenue, where government is spending their money, and revenue, where are we taking it from? There are two main sources for revenue: tax and non-tax. I'm sure you always hear us talking about tax revenue has fallen short of its target, etc. Now, government instituted a council to guide them in expenditure and revenue so that we don't exceed what you get. So it's like, imagine you are paid 1,000 Ghana every month and your expenditure is 2,000, which means that there's a shortfall of 1,000 Ghana. That's the situation as a country. We spend more than we get. And when we spend in excess of more than we get in certain financial years, they lead to problems. So this council has been instituted to guide the managers of the economy to ensure that we don't spend what we are not getting, and we can match our expenditure to our revenue. So that's essentially what the council does. It's made up of eminent and smart, erudite people to guide His Excellency and all the people in the financial architecture on how they spend our revenue and how they raise their revenue.
I think I need to get a fiscal council for myself.
And I'm sure you also need to get a fiscal council for yourself. And this has been Joy Business, breaking it down with me, Philip Nanfuri, and my colleague, Albert Obisu. Bye.
Bye.
Thanks for watching our program tonight. My name is Daryl Kwao.